What's up, y'all? Welcome back to the Mining Pod for this week's news roundup. You got your boy Matt Kimmel here and your boy Colin Harper. Matt, how we doing today, man?
Excellent. Wonderful day to talk mining news.
Yeah, it's a interesting week. A lot of pretty cool stories in the lineup, like all across the board, from institutional stuff to kind of like a heartwarming story about donated hash rate. So we've got the usual with the difficulty update. We've got a note on Hive's acquisition that is pending for Bitfarms' Yguazu 200 megawatt facility in Paraguay. We've got a note on Grayscale launching a Bitcoin miner ETF. ETF's always hot. Seems like we're going to continue to financialize every aspect of the Bitcoin industry. We have a hosting update from our friend Karun McIncherry from Compass. We've got the heartwarming story, which is first ever Bitcoin Hashrate fundraiser mines full block for nonprofit, which was concurrent with the Nashville Energy Summit that's currently going on, and which is why our boy Will Foxley is not with us. He abandoned us for the bustle and boom of Nash Vegas. And then we have a quick note on DeepSeek from an article that I wrote for this week's newsletter on the Mining Pod. Not really news so much, it's just kind of second day analysis. And then for this week's Cry Corner, why you should never trust Brad Garlic Breath from Ripple. But before we get to the news, a quick word from our wonderful sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to the Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
All right, and we are back. Matt, Mr. Network Weatherman, what are we seeing in the forecast?
We're seeing something that will have miners everywhere very excited, Mr. Colin Harper. We had a difficulty decrease, breaking an 8 consecutive difficulty increase streak this past week of minus 2.12% according to Hashrate Index, which if you are watching on YouTube or somewhere where you can get video, Colin has up on the screen. And so what is that? Is that 4 months, Colin?
Yeah.
Straight of difficulty rises?
Yeah, 100%.
And so that, and that's showing up in hash price as well. Can we show that?
Yep.
Yeah, boom. And Bitcoin price is rising as well today at the time of recording today. And so we're at, let's see, let me zoom in here a little bit. $62.17 per petahash per second per day. That is the measure of gross revenue of the Bitcoin mining sector, hash price, and that is reported by Hashrate Index here. So things are looking up for miners. I also read an article this morning from our friends at the Miner Mag that kind of anticipates that we'll get some more potential difficulty decreases down the line. What they were citing was hardware purchases from a lot of the instos they track over there on their data dashboard. And it was really heavy in, Q3, Q4, 2023. There's a lot of purchases. And as our listeners likely know, it tends to take 6 to 12 months, to actually get hardware up and running online and hashing. And so it was a lot relatively less actual hardware purchases in Q3, Q4 2024. And so the expectation from them is that hash rate may actually slow a bit, which interested to hear your thoughts there. I mean, of course, if price, rips, we're going to see a lot of secondary market, I think, machines start to come online wherever there's rack space available. But, it is interesting to see, people following the actual purchases of machines. And then also, I mean, the elephant in the room that, everyone's talking about as well is all the actual energy and data center pivots over to the AI space among miners as well, which may contribute to that. What do you think, Colin? Two questions for you, I guess. What do you think about that hash rate outlook, but then also what maybe is causing the difficulty decrease just in the past, week?
Yeah, I'm glad that you brought up that story from Wolfie, because he's been tracking purchase orders since like 2022, and you can see pre-orders on that chart. If you go to Miner Mag, I think it's like the most recent article. And I think that it's a good indication that a lot of the pre-orders for next generation machines have been made. A lot of the orders have been made. They're going to be coming in over the next year. We might see a slowdown as a result. I do think there are a few things here to note. One, public miners are almost always overly optimistic on their ability to roll out expansions. And so like they'll have these charts and investor presentations of we're going to expand by X percentage over the coming quarters. Sometimes they actually execute, but a lot of the time it's much more difficult to actually get those units online in the time frame that they give themselves. We've seen this time and time again with promises of energizing just like massive fleets. I do think that there's probably an argument to be made that we might see a little more some slower growth this year than in years past. That being said, though, we often focus on public miners, and there are, private miners all around the world who are going to roll out ASICs in markets that aren't the US or aren't Canada or the other countries that those public miners are operating in. So maybe it doesn't make as much of a difference. Do think that a lot of estimates that I've seen places the network somewhere around like 1.1 to 1.3 Zeta hashes by the end of the year. I think that's probably like a pretty good benchmark for where we'll be. But if that does happen, it's going to really weigh on hash price. But to your point, if Bitcoin doesn't really continue ripping or rip as hard as maybe it has in prior bull markets, that'll put a cap on that growth. With regards to what caused the downward difficulty adjustment, another piece of data, or should I say another piece of content from our friends at Luxor and Hashrate Index, an article that the research and derivatives team put out this week: colder weather in the USA leads to warmer hash rate markets. And basically what this article details, we won't spend too much time on it, is that like there have been a number of cold snaps around the US over the last few months. And as a result, energy markets have been all over the place. Power has been more expensive in the places where the cold snaps have occurred. And we're seeing curtailment from industrial scale miners in the US as a result. And that's really impacted hash rate. Over the last month, hash rate has been flat to just a little bit down. I think it was like 10 exahashes or so over the last month have come offline. And they've got some great charts in here looking at power prices per difficulty epoch in different areas in the US. And one thing that they noted is that, their forward market over at Luxor anticipated this move. And a lot of the forwards for some of the contracts in January actually anticipated the increase in hash price. So it looks at, I think we've talked about this before, but seasonality has always been a consideration for Bitcoin's hash rate. Back in the days of China, it used to be because of the wet season and the wet season and the dry season, basically forcing miners to migrate either to the Sichuan region for hydropower or during the dry season, migrate to the coal heavy regions in Xinjiang and Inner Mongolia. And we're seeing something similar play out in the US, both in the winter when cold snaps happen and you have these very brief kind of power spikes that end up creating a blackout for hash rate, or really more in the summer, like in places like Texas, where heat waves end up disrupting power prices and then miners curtail as a result. So it's just super interesting. I mean, when I was talking to Ben Harper at Luxor about this week, it's I don't know, the inputs are always much more complicated than you think for a lot of this stuff. It's like, it's not just about Bitcoin price. It's not just about hash rate coming online. It's about weather and all of these other considerations. So, but moving on to the first story for this week's roundup. Big M&A deal this week. Hive is buying a site from Bitfarms for an all-in cost consideration of $85 million. We had the Hive team on yesterday for the Bitcoin Stock Show live stream. That is now on our RSS feed too. So if you missed that, you can check it out on YouTube, or you can go to Spotify or wherever you get your podcasts. And the TLDR of this is Bitfarms is rotating out of its largest site in Paraguay that is still under construction and putting its chips on its Pennsylvania sites that it is purchasing from Stronghold in Sharon, Pennsylvania, and I believe one other place. And Hive is leaning into Paraguay. So just a few deets for this deal. Hive anticipates that this site, which will be 200 megawatts once phase 2 is completed, and their other site for 100 megawatts in Paraguay will end up catapulting them from 6 exahashes to 25 exahashes by September. I believe the deal should close in Q1 of this year. That's what Aiden from Hive said yesterday. And it involves 2 installments of payments to Bitfarms for $56 million for the site, a reimbursement of $19 million for the deposits, and another $10 million for remaining capital obligations for completing the sites. And if I recall correctly, I think they said that they believe that phase 1 of the site, which is for the first 100 megawatts, will be done in, I think, like April or something like that. And then phase 2 will be done at the end of the year. A few other kind of operational things for this. They're going to outfit the second phase with hydro units from Bitmain, the Antminer S21 Hydro. And I'm curious to get your thoughts on this, Matt, as someone who works at CoinShares and like you're a little more plugged into the finance side of things. One of the arguments for why Bitfarms is leaving Paraguay is that it's sometimes more difficult for these public companies to access capital if they have a lot of infrastructure overseas. And so there's like 2 bets going on here. One of the bets is from Bitfarms saying, you know what, like cheap power is great, but like we want to be positioned to be able to tap into capital markets in the US and capitalize further growth. So we want to lean into what some people might consider a more buttoned up regulatory jurisdiction. And then Hive is saying, well, hash rate is hash rate, cheap power is cheap power. We're going to go down to South America where we can get like $39 per megawatt hour power with Andy, which is Paraguay's power authority. And during the live stream, Aiden and specifically Frank Holmes, the executive chairman of Hive, spent like 10 minutes talking about how chummy Trump and Pena, Paraguay's president, are, and talking about how it's like a very pro-America, stable business jurisdiction, which I thought was kind of telling. It's almost like he's saying, this isn't a problem. There's no perceived risk here. So curious what you think about that argument that maybe you'd want to not have assets that are not US based or North American based for capital market access specifically.
It's a really interesting question. I think that, well, first and foremost, right, mining is a commodity production business. And like commodity production businesses, it is CapEx heavy. And so you're going to need a lot of it. And so access to capital is very important. And really, if you look at miner profitability and you could just run a model of like an example miner, you don't even have to take an existing one. If you just plug in some inputs and look at, ROIs, return on capital, right? The timing of when you, the timing and the cost, right, of when you actually purchase, say, machines or facility, what price you end up getting will be a major factor in determining how much money you make down the line and how quickly you can actually get an ROI on that capital. And so I think it's definitely an important consideration, right? In a business where you're paying for some very expensive items. Energy assets, data centers, substations, it goes on and on. These are not coming off the shelf as consumer goods. It's really a specialized industrial industry now. But as you said as well, as far as your OpEx goes, a main driver is your electricity cost. And that factors in hugely to your unit economics as far as what efficiency of machines are even capable of running and still generating cash flow, right? So the lower the electricity cost you have, the longer you can run older generation machines that are less efficient. And so, I mean, interesting deal. I would love to talk to, Hive or Ben at Bitfarms to kind of get their takes. It's clear that, Bitfarms is looking to kind of basically skew their distribution of their hash rate back to the States, right? If that's for capital reasons or for something else. And Hive maybe wants to be less concentrated in a certain region. There was a lot of talk about being less concentrated in one region or another a couple of years ago when the mining ban happened, right?
Right.
And even though that's several years ago, it feels like it was, I think, yesterday to a lot of people in the industry. But everyone that was concentrated in China at the time had to quickly find another jurisdiction for completely regulatory, political reasons. And then those who were able to stay online at that time when price was going up, outpacing hash rate, right? It was a really, really profitable time for those people. And so there's definitely arguments to both sides. And I would be interested to hear strategically from the decision makers involved at both companies.
Yeah, no doubt they'll both talk their own books as they kind of did in the press releases. But it is an interesting case study in terms of different strategies for how to allocate hash rate geographically, right? And I think I'm not going to speak for Bitfarms, but to me, it makes sense that they would say, you know what, we're purchasing Stronghold. We're going to get these data centers and power plants in Pennsylvania. We should just try to focus on developing this. And that allows them to play into the PJM power market and have flexibility with how they manage their power. And on Hive's end, one of the things that Aiden really hammered home during our talk was going back to your ROI point. He just kept saying the ROI for this will be crazy because the power is cheap and because of the dollar per terahash that they, secured for their S21 fleet. That being said, though, he was modeling that based on a flat hash price. So you always have to take that into consideration. Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com. Speaking of public miners, an interesting story, and the people love a good ETF story. Grayscale launching a Bitcoin miner ETF. What's going on here, Matt?
Yeah, so basically a product that's going to be a basket of different publicly listed miners. We'll talk a little bit on this. My firm as well has a publicly listed miner ETF basket. And basically the idea is that the ETF product invests in a range of different companies at different weights. And so you get kind of exposure to sector wide of the mining ecosystem itself instead of, kind of stock picking you as a direct investor or investing in something like Bitcoin, right? And Bitcoin and miners, although we think of them as kind of this group together as far as investments goes, they have different fundamentals that drive them, at least theoretically, right? And they're not perfectly correlated. So that's kind of the story there. You have up on the screens now which miners are being held in this basket product and their weights for the viewers that are watching on YouTube.
Yeah, and the weights are kind of what you would expect. The Miner Mag reported on this, and they pointed out that top Bitcoin miners end up making up more than 50% of the weighting. So the weights for some of the top stocks are as follows: Mara at 16.66%, Riot Platforms at 11.92%, Core Scientific at 9.2%, CleanSpark at 4.79%, Iron at 4.37%, and Hut 8 at 4.22%. The Core Sci one is interesting to me because it's almost like they're saying, we don't know how this AI thing is going to shake out. Maybe they see more risk there. Maybe that's not even fair to say. But Mara and Riot being the two largest holdings doesn't really surprise me too much. And then there are a few others down here. Like I think there's a NVIDIA. Where is it? Yeah, NVIDIA is like 2.8%. Intel is also in there at 2.99%. And then Block, interestingly enough, Jack Dorsey's company at 3.22%, and Canaan at 3.39%. So bunch of different things in here. I'm kind of surprised that we didn't get something like this a little bit sooner, honestly. I would have thought that this would have preceded a Bitcoin ETF. But, the Bitcoin ETF really opened the door for, I think, a lot of this. A lot of these financial, instruments.
Well, I will sneak in here that the CoinShares Miners ETF is about to hit its third birthday, I think. So it's been around longer than the the spot Bitcoin products.
Put me in my place, Matt. Sure.
Well, the equities baskets products are a bit different, and as you know, right, Colin, there are so many more listed mining companies now than there was when we were growing up in the Bitcoin industry, right? Yeah. So, back in 2017, 2018, right? I mean, the first ones were, I remember Hive back then. I remember Bitfarms was pretty early. Riot, right? There was really only a couple. And now I think there's 14 or 15 listed in the US. And
maybe even more,
close to 30 globally.
Yeah.
So, the amount of listed equities that are in the mining industry has changed quite a bit.
Well, and it's a super crowded trade at this point. And one last thing before we bring Karun on, he's been very patient in the bull pit over there. I think Khan Ferhani pointed this out last week after he presented on Luxor's year-end report. And if you actually look at the correlation between these stocks to Bitcoin, they had some of their weakest correlations last year. It might have been the weakest all time. These stocks are not trading with Bitcoin the same way that they used to. And that could be, I think, the most obvious reason for that, or the one that people often point to, is the Bitcoin ETF, right? You no longer need a proxy for Bitcoin. You can just hold Bitcoin ETFs, and that's like a pure play investment, right? But I think also part of it too is just like, you pointed out that these miners are kind of starting to differentiate themselves, and there are so many of them at this point that the market is really pricing different ones, pricing these stocks differently depending on a bunch of valuation metrics. Not to mention also that I think that investors are getting a little more savvy, right? Like you're starting to see like earnings expectations be loosely based on hash price. Because that's one of the things that I thought has been really interesting over the last few years. And the whole we're going to announce $1 billion ASIC order to move our stock price. Those kind of things don't work anymore. But issuing a convertible note to buy Bitcoin does for some reason. But anyway, beside the point, we're going to welcome Karun on the stage, and we're going to dive into some sales metrics at Compass to see where the hosting market's at and what machines people are looking for. Karun, how you doing, man?
Good. How are you guys?
Pretty good. Take it away, Karun. What are y'all seeing in the new year now that we have almost a month's worth of data behind us for 2025?
Yeah, for sure. So I can kind of talk about the general market and then dive into the Compass specific data that I'll be sharing here today. So in terms of demand, still that high interest of level for hosting, because as you guys talked about, hash price is pretty elevated. So, even if you have a J Pro or a better efficient machine, you're likely going to be break even or profitable even at retail hosting rates. One interesting thing that we're seeing at Compass specifically is this drive for demand for hydro miners from the market. Right now, it's mostly enterprise customers that are asking for it. But the thinking there being, with hydro having a better efficiency, being better in different climates, customers kind of want to be set up for the long term for mining. On the supply side, in terms of the fixed rate market from the wholesale hosting market, that's still level. I'd say somewhere around 5.5 to 7 cents is what you would expect, depending on the location and the size, obviously. Still a lot of opportunities, though, for profit sharing, for some of those older gen machines that we've talked about before. And that hydro demand is reflected on the supply side, where we're seeing a lot more sites pop up that are adjusting to host these hydro miners. And then in terms of growth, what we've talked about in the past, like for growth for miners, is that we've seen a lot of miners moving operations to the US, right? Like what you guys talked about with Bitfarms. I know Phoenix had announced within the past month about their 50 megawatt deal in North Dakota. Also seeing miners leveraging their infrastructure for AI needs. Obviously, there's a ton of stories in the space about miners looking to diversify into the AI space, and then vertical integration. Lots of examples of miners owning their own infrastructure and then offering hosting through there. So that's kind of general market, but yeah, we can kind of dive into the Compass data. So last month, our main takeaway was that retail was back. That was mostly driven again by that elevated hash price and all these, even older gen machines being profitable. So with this month, I'd say still seeing elevated interest from retail. That enterprise interest is still constant and always a driving force for us at Compass, but then also seeing some increased interest from the new customers as well. And so, our main takeaway is, with retail, they're going to have the most urgency to deploy capital when Bitcoin price kind of rises up in a quick manner of time. Whereas when Bitcoin price is trading sideways, or maybe even hash price is a little bit lower, that's where you'll see that constant demand from the enterprise customers. And so that's kind of reflected here in the data. Obviously, we don't have all of January data. I think this is through January 27th, but you'll see that enterprise demand still constant, retail still high, a little bit lower, but then obviously the increase in the new customers.
All right. Let's move on to this one, which I think is interesting because you can see just month by month, there's huge swings here.
Yeah, definitely. And so you'll see, compared to December, the average number of miners that are being purchased per order is kind of starting to trend upwards. Our main takeaway last month was that post-election, seeing a lot of retail entering the space, and with retail, they're going to buy a lower number of miners per order, and also they're going to be skewed to some of the older gen or poor efficiency units. In terms of the number of orders, we're starting to see that creep back up. And so main takeaway here for this month is that this is being dominated by the enterprise buyers who are more likely to buy in bulk, place larger orders. Could be driven, by this flat hash price that we've seen, I'd say, over the last 30 to 45 days. That could be kind of the main reason here why we're starting to see this average number of miners purchased trending upwards with the enterprise demand.
Do you see a difference in which models, like enterprise versus retail, are specifically ordering? And I guess it's kind of like a good lead into like the next chart, but I'm curious if there's any disconnect there.
Yeah, 100%. Yeah. So if you want to jump to the next slide, I think that will kind of help paint the picture here of what we're seeing. So retail in general, they're going to have a lower barrier to entry in terms of the machines that they want, right? So they're going to buy some of the lower cost machines, which tend to be poor efficiency or older gens. Interesting enough, we're seeing a lot of demand from retail, specifically for the XP and the K Pro models. That's been increased, I'd say, over the last 2 months. Those are obviously very profitable at average retail rates at this hash price. And I think they're, the break even at, let's say if the hash price right now stays constant at around 6 cents, the break even hosting rate for an XP would be around 11 cents hosting. So, if you believe and you're bullish on hash price, at least for near term or long term future, you're gonna be okay with an XP because 11 cent hosting is not really what's being offered in the market right now. You can definitely do better than that.
And so that's why sorry to interrupt, but that's like why we see this efficiency curve kind of go upward in terms of the average efficiency. Like was 17 in October, and now it's 19.97 as we're almost done with January.
Exactly. Yeah. Like in August and October, I'd say, sales were dominated by enterprise. And so they're going to be buying the S21 series. Whereas post election, you're seeing a lot of this customer demand, XPs, K Pros. I mean, we've even had customers buy J Pros off of our marketplace. That's something that we offer where customers can resell their machines to other customers. And so we're seeing a lot of demand there for some of these older gen units and starting to creep up our average efficiency per order. Well, one more thing I'll note here, not really shown in the graph, but we are seeing a continued premium in the next gen hardware in terms of like pricing. And our belief is that's due to kind of like the low supply and some of the logistics constraints that we've seen over the past 6 to 8 months. I know you guys have reported on it and others. And so more likely, with that premium, enterprises are going to buy those machines again compared to retail.
So you're saying that premium is larger than it would be normally? I mean, like obviously next gen always have a premium to older machines, but you're saying that gap is even wider right now than what it was, say, 4 months ago, 5 months ago?
Yeah, exactly. Especially when it's a domestic based machine. If you don't have to deal with those logistic constraints, that's going to obviously fetch a higher premium.
That's interesting, and yeah, definitely notable given the port freezers or the holds and the ASIC orders for the S21 and T21 series that have been detained that we reported on a few months ago, or I guess that was December. Karun, one last question before you go. Where do you think the hydro demand is coming from? Like, why is that happening now?
Yeah, I think it's just based off people's belief of hash price long term and the kind of, I'll say, not as much increases in the efficiency in the air cooled miners. And so people are very bullish long term for hydro. From what my understanding is, these hydro miners can also be placed in poor climate environments, so higher temperatures and whatnot, and perform better than air cooled. And so I would say though, like this demand isn't coming from everyone in our customer base. It's very centered around our enterprise customers who are a little bit more knowledgeable, right? They're a little bit more plugged into the space, and so from what they're seeing, that's driving the demand on the Compass side. To be clear though, it's nothing that we're offering right now at Compass. We don't offer any hydro solutions, but because of this demand, it's something that we're actively exploring with partners and others.
Karun, thanks for joining us, man. Hope you have a good week.
Of course. Thank you all.
Hey, this is Will with Blockspace Media. And I don't know if you heard, but we just announced the second edition of our conference series, Op Next, now to be held at the MicroStrategy HQ in Tysons, Virginia.
That's right. After the success of our first scaling conference at Fidelity last fall, we're doing it again this spring, April 11th and 12th at the MicroStrategy HQ. I'm really excited for the programming. We have various stakeholders, industry, developers, and Bitcoin miners present.
So join us in April for open, neutral, and honest conversation about the leading proposals and technical solutions that will scale Bitcoin to the next billion users. No booths, no tokens, no shills, just Bitcoin and honest conversation.
You can find tickets and more information at opnext.dev or click below in the show notes.
All right, Matt. Feel-good story. The people love a feel-good story, especially when it involves donating Hashrate and the little guys mining a block.
Yeah, a fundraiser, but instead of donating your dollars or your sats, donating Hashrate. And 350 entities participated and reached a collective at one point over an exahash as far as this nonprofit mining. I believe it's the 256 Foundation. The 256 Foundation. And they want a block, right? They want a block. So
we hit a block.
No way.
What?
You saw it live here on stream. Do we have a block number?
Yeah, we hit block.
Let us know. I'm pulling up mempool.space. Will you guys shout outside that we just hit a block?
881-423.
881-423.
881-423.
Congrats to Pod 256. We have hit a block.
3.146 Bitcoin in rewards, worth about $330,000 at the time the block was mined. Block number, for those curious, you can look it up, 881-423. And so, yeah, it's super heartwarming story. Really neat to see I'm sure someone out there can run the odds on this. I believe they were doing the fundraiser for about 10 hours.
Yeah,
and just over 1 exahash was the peak. I think they mined the block when they were at 800 something petahash per second. But yeah, I would definitely look it up on Twitter because they were live at Bitcoin Park when they found out. So it's more than just a heartwarming story. You can catch it on video.
Yeah, it's pretty cool. And yeah, this was spearheaded by Rod Rudy of Bitcoin Park and Econo Alchemist. They have a Bitcoin podcast called Pod 256. And they launched the fundraiser, per what Matt said, like 10 hours before this block was found. And, all of the money from it goes into this charity organization, 256. And the fact that they found the block while live streaming at the Nashville Energy Summit that they throw at Bitcoin Park, not even 12 hours, not even 24 hours after they launched this initiative is pretty crazy. And the miner that found it too, it was like an Apollo miner, right? Which is like specifically like an at-home miner, right? It was like a mining, it was an ASIC with relatively little hash rate. And then obviously though, the whole thing was a pooled, was a pooled effort, right? With like 1 exahashes, but still pretty crazy story. And I believe this is the first time we've actually seen Hashrate being donated for a charity effort, right? Like this is the first time that Bitcoin miners have gotten together and mined a block specifically with the aim of donating it to a charitable organization.
Yeah, first that I've heard of. And they found it, I think, ahead of schedule. If you break out the odds, given the network's at, we'll call it somewhere 780 to 800 exahash per second. 100%.
And I'm reading this tweet from Pete Rizzo. I've not fact checked this, but it seems right based on the block header. It's a $400 home Bitcoin miner, the Future Bit. I believe that's by a company called Apollo. And that's just pretty crazy. I mean, we've seen all of these solo mining stories kind of crop up over the last few years. And home mining is kind of in vogue again. And a lot of people like kind of playing the Bitcoin hash lottery. But on another note, specifically not anything Bitcoin mining related, but it affects Bitcoin because it's AI and HPC related. And those two things are becoming increasingly intertwined, at least in the market's eyes. A quick note on DeepSeek. So for people who were not active over the weekend, the internet, or at least certain aspects of it, right, certain enclaves of the internet, freaked out over this Chinese LLM called DeepSeek. Specifically, what they were freaking out about was this LLM was released, I believe, on like January 20th or something like that. They open sourced it, and then they published in their white paper the costs to develop it. And people were losing their because the sticker price for developing this model, according to that paper, was like $5.6 million, which is really crazy when you put into when you take into account that OpenAI's ChatGPT 4 cost anywhere from $100 to $200 million to train. Now, I tackled this topic for the Mining Pod newsletter this week, and the TLDR is that 5.6 million figure is misleading because it only accounts for like the final training run for the model. It does not account for R&D before that. Also doesn't account for the fact that the model was likely distilled from other models like ChatGPT. So distillation for large language models is basically where you leverage an existing LLM to train your own. So like without OpenAI's ChatGPT, this model would not have been possible to stand up, more than likely, according to some of the research that I did. Now, the important thing though, because there are some pretty interesting game-breaking or game-changing aspects to this model, specifically this idea that it can like think for itself. And what that means specifically is that this model will actually retrain itself as it's being used, rather than the engineers having to go back and retrain it after a iteration, right? So like with ChatGPT, they released their first one, what was it, like the beginning of 2023? And then people would use it and then they would retrain it and they would release successive versions of it. This one can kind of train itself as it goes along as people use it, which is pretty wild. And there are a bunch of other things that I list in this article of like why these, like some of the other features that distinguish it from other models. One of them is semantic contextualization. the idea that it can like read between the lines of your question to divine like not hidden intent, but like, more additional context and the intent behind certain queries. So it can kind of like read further into what you're saying or what you're asking it. It also has cross-modal search where it can analyze different media simultaneously. And it requires fewer parameters than ChatGPT. So DeepSeek R1 has 670, there's a typo in here, I should fix that, billion parameters in total, but it only requires 37 billion parameters on average for each output. Compare this to the 500 billion to 1 trillion per output for ChatGPT. So I thought that this was interesting and was just like kind of worth touching on because there are a few things here. The market freaked out over this. NVIDIA ended up losing like 17% of its market cap or its value, like shed 500 billion in its total market cap, which is crazy. Energy stocks like Constellation Energy were down 20%, and a few others, like one other one, lost like 30%. So the market like kind of shit its pants momentarily, but because not everyone had the full context. Now, the one thing I will say about this is my understanding is that this was somewhat cheaper to train compared to ChatGPT, but the actual how much cheaper is like kind of yet to be determined. But the biggest thing is that specifically for inference, which is like using the AI, right? So for AI computing, there's training compute and there's inference compute. This will make inference much cheaper. I mean, this thing can be run locally on like a MacBook Studio Pro, which is pretty crazy. So this will open up an entirely new, or open doors to like kind of more use cases and cheaper use of these AI systems potentially. And so people were kind of freaking out about that because the idea was, we're going to need fewer resources to actually stand up all this AI infrastructure that guys like Sam Altman have been saying we're going to have to pour trillions in over the next 10 years. But then, the last thing I'll say about this, Matt, sorry, and then I'll kick it over to you. There's this concept called Jevons paradox, and Bitcoin miners should know this well. Whereas resources are consumed more efficiently, demand for those resources and the services that furnish them actually increase rather than decrease. Great example of this in everyday life is mile per gallon efficiencies for internal combustion engines, right? Those have been increasing since the Model T. We use more oil and gasoline now than ever. Bitcoin miners know this very well, obviously, in terms of joule per terahash ratings for ASICs, right? So anything to add, Matt? I know I just kind of like vomited all over the pod.
Crushed it. Absolutely crushed it. And smashing article as well. Yeah, we'll keep the show moving. I'll just say if 500 billion came off of Bitcoin like it came off of Nvidia, it would be like 25% of its market cap. And so it would, like, imagine a just absolute day red candle from 100 down to 75.
It's just absolutely brutal. It calls to mind the FTX meltdown in 2022.
Yeah, a bunch of miners were affected as well, obviously. As far as equities goes, because many of them have AI slants. And it seems like a lot of people are kind of commingling the two, just generally speaking, as like new growth, things I don't really understand, technologies. So I don't know. Good. Glad that you're monitoring the situation and enjoyed the article.
Thanks, man. It was interesting to research. My head was kind of in a pretzel at the end of it, though. Just a totally different realm. Speaking of different realms, the realm of hypocrisy and coinery. Oh, I'm not supposed to curse on pods anymore. Apologies, Will. But Brad Garlinghouse, the CEO at Ripple, having some thoughts on maximalism. Matt, what's going on here?
Let me say this as clearly as I can. The crypto industry has a real shot here and now to achieve the many goals we have in common if we work together instead of tearing each other down. This is not and never will be a zero-sum game. And that goes on in a bullet point list to basically talk about, I own a bunch of different cryptos, even though I'm the head of Ripple Labs. If the government does a reserve, I think it should be representative of the industry and not just Bitcoin itself. There was a lot of commentary online about the executive order that talked about the potential of a national stockpile of, because the language is digital assets. There was a lot of commentary about what does that mean? Is it not just Bitcoin? And we will find out, right? But this story is about the tweet is a cry corner, And I will just bring up, because, Colin and I are both old enough to remember things that Ripple Labs has done in the past. And it's quite hypocritical to say if we just work together instead of tearing each other down, given the amount of funding that Ripple Labs gave to Greenpeace several years ago. If you're not aware of it, Google it, and you'll find that they basically funded a smear campaign against not Bitcoin itself, but miners, the backbone, the foundation of operating the network and producing blocks that we love so much on the show. So I'll send it over to you, Colin.
I think that's the kind of the main point to me. It's just totally hypocritical because of the Greenpeace smear campaign against proof of work. Also, reportedly, this is not confirmed, but apparently Brad Garlinghouse and XRP are trying to undermine the concept of a Bitcoin strategic reserve by inserting XRP and other currencies into it, which enriches them, right? They own an outsized portion of the supply. And Ripple and XRP have just been kind of a perennial joke amongst a lot of serious people, not just in Bitcoin, but in crypto, because it's been around for so long and it doesn't do anything. You may not like Ethereum and you may not like Solana, but people actually use the chain for things, right? They're using it for trading, they're using it for NFTs, they're using it for whatever you want to, lending protocols and things like that. No one uses XRP. And the talking point has always been that it's going to be this interbank settlement rail, and there's nothing is happening with that, right? There was the Swift partnership thing, I think a few cycles ago, that was always touted. And it's so funny that this is still around because there's just, there's no reason for it to be. The last thing too is that they lost the ledger from block 0 to I think a block in the 10,000s, and so the first few days of XRP's genesis are just completely gone from the chain. So anyway, I thought that was kind of an interesting thing. But you had something to comment.
My closing thought here. I'll just say to those out there that maybe you're newer to the space, or maybe you've been around for a while and you just don't really understand why a lot of people kind of feel some animosity against Ripple Labs. There's a piece written by BitMEX Research about kind of the history of Ripple. I would just recommend that. I think it's kind of the silver bullet, if you will, in understanding kind of the saga of the history there, which I really value in this space, and understanding what the things that have happened in the past. So yeah, the Greenpeace nugget, I think, is what everyone will talk about. But if you want to understand the broader story in a nutshell, I think it's a great report.
Just the tip of the iceberg. That's a really good plug for BitMEX. Does fabulous research, and I definitely recommend you all check that out as well. All right, Matt, I think that does it. Sir, have a good week. And to all of our viewers and listeners, thank you all for tuning in, and we will see you all next week.